let's say we're looking for a bullish market or an uptrend. So here we see the price creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, okay? So here, market price is breaking the structures to the upside. We're gonna have to mark our break of structures. We're gonna have to mark our break of structures. Okay? BOS stands for break of structure. So mark all your break of structures until your latest break of structure, which is right here. Alright? On the lower time frame, every pullback that you see here is gonna look like it's creating a lower high, lower low, until it reverses back to the upside and continue with a higher time frame trend. Then what you do is you wait for the market. You go to the lower time frame and you wait for the market to basically create a low high, low low. Once you see the market coming back, you mark your demand zone somewhere around the higher low and the higher high. So basically the market is trading between this low to this high. So this is your trading range. And on the lower time frame, you have your low highs, lower lows, pretending like the market is going down, but it's just trying to align with the higher time frame trend. So now what you do is you wait for the change of character, retest, and then buy to target this structure here. So what you do is, once you identify the market coming down on the lower time frame and it hits your demand zone, okay? It hits your demand zone. You wait for a change of character back to the structure here, your demand zone, and then you target your previous highs there, okay? And now we're going to try to identify a downtrend or a bearish market. Let's say here the market is making lower highs, lower lows on the higher time frame like the 4 hours or the daily. Market is breaking structures. You mark your structures again. Break of a structure. Marking your break of a structure here. Another break of a structure here. Still going down. Another break of a structure right here. So here you have the price going down and breaking their previous lows, created low highs, lower lows. Now you will mark your trading range. So the price is traded from this lower high to this lower low, and then you got to go to the lower time frame, look for the market, create a high, 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 low, pretend like it's going up. Okay? Once you see the market going back up to retrace and align with the higher time frame trend, you mark your supply zone. You find your supply zone on a downtrend market in a demand zone, on an uptrend market around demand zone you find around the high low, and the supply zone around the lower high most of the time. So now that you mark your supply zone here on the downtrend market, and this is your lower time frame telling you, the market is going back to reverse, back to the supply zone, then you stay patient and wait for the price to give you a change of character. Okay? Here's your change of character. CH. Once you have your change of character, you get to target your previous lows, which is here. Okay? Also, I just want to add this. If you want to save your break of structures or on your trade view template, just double click it, right? BOS, and then go here, save, BOS, and then save, okay? So that next time you don't have to rewrite it again. So now that we identified how, uptrend and downtrend looks like and how to find supply and demand on this illustration, we're going to go to the real chart and show you in a real life market. So let's say here, the market is creating high highs, high lows in an uptrend market. Okay, we have a break of structure. Mark your break of structure as usual. You have another break of structure here. Okay. And then we have another break of structure right there. So what happens here is, let's say the market was breaking structures to the upside, creating high highs, high lows. We have a high low led to a high high, breaking this structure here. So what you do from here is, you're gonna have to go to the lower time frame, like the 15 minutes, 1 hour, and just wait for the market or the price to create the pullback towards to the downside, creating lower highs, lower lows. Okay? Until it comes back to your demand zone. So you're gonna go to the 1 hour time frame. You're gonna go to 1 hour time frame, or even the lower time frame, to find your demand zones. Once you find your demand zones, you mark it, okay? This is your last down candle that created the price to the upside. Okay? So now what happens is, on the lower time frame, the price is going to create lower highs, lower lows, come back to the demand zone. Once it hits your demand zone, you scale down to the lower time frame and you look for a change of character, and then target the price here. Okay? Over here we have another break of structure. We have the market price here creating high highs, high lows, low, high, breaking this structure, giving us a break of structure, okay? Once you identify that, you wait for the market to create some type of lower high, lower low on the lower time frame to come back to your demand zone. So your demand zone could be somewhere here, this candle here, or it could be this area, which is your high low, and then you wait for the price to come back all the way down to give you some type of change of character, and then you target your next high, which is here, okay? Alright, you see the market come back all the way down, give you an entry, and then you target your next high. Okay? Right there you go. Alright. So this is how you identify an uptrend market. Always look, identify the direction of the market, which is the order flow. So when you see here, market is going up, creating high highs, high lows, and then pull back to the downside, move up, pull back to the downside, move up, pull back to the downside, and then move up. Okay? So this is how you look for your uptrend or bullish market. Now we're going to try to find a downtrend structure. Alright? In a downtrend market, we can see here the market is clearly creating lower highs, lower lows, breaking structures to the downside. We have price giving us a change of character here, because this was your last higher low, create a higher high, market came down, broke the structure, went up to retest this zone, and then continue to the downside. Okay? Now what we do is, we're gonna mark our break of structures. You have a break structure here, 1, DOS. We have another break of structure here, 2. Okay? And then we have another break of structure here. Market, DOS. So market is creating lower highs, lower lows. So let's say you wanted to trade this break of structure here. Okay? Market give you a break of structure to the downside. You'll mark your supply zone around the lower high. You go to the lower time frame and you wait for the market to give you, the price to give you some type of high, low. And then once it hits your supply zone, you wait for a change of character. wait for a change of character, and then move up to the downside, okay? Targeting the structure here. There you go. Alright? Gives you, a change of character, retest, and then continue to the downside. Alright? Another one here, the market breaking the structure here. Market breaking the structure. Once it broke the structure, you mark your supply zone somewhere there, and then you wait for the market to basically go back and give you some type of high, low, high, high, low, high, 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 low. Okay? Back to your supply zone, change of character, and then target structure here. Okay? Just like that. So this is how you find and mark your supply zones and your market structure. Nothing is very complicated. This is very, very easy. So just take it easy. Nothing is hard here. Keep practicing, keep marking your charts, and trust me, you're gonna get to where you wanna be, and you'll be very successful. You'll make it without any doubt. Thank you very much again. Thank you for watching the video. Make sure you subscribe to the channel. I hope you all have a beautiful trading year. Peace out.